Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of The Trading Floor with your humble host, Angie Barbosa, Jeremy Alexander Newsom, Johnny Guarco, Brad Reed, Chris Irwin, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Boys and girls, friends and family, traders from around the world. What's up? It is Monday, Merchant Monday, looking at some merchant stocks for some swing trade opportunities, and we'll also be considering some of the market ETFs. So we're going to be looking at the general market and kind of my viewpoints. Folks, I love the candle that we're getting today. Love, love, love it. I do. Great location for it to be happening. Honestly, this is... I don't think that this happens exactly the way I want it to, but if it does, I'll be very, very excited. Here's my thought. We mentioned numerous times a potential pattern like this and getting a resistance right here. We also mentioned that this gap back on the 30th of March felt very, very similar to this gap over here, in which case it filled, we bounced, made a high, a third lower high, then we traded down and bounced strongly. I don't think that it plays out exactly that way. But what I would consider doing is creating a plan to mimic that potentially happening. So, if we do get a little bit of a sell-off down into here, or maybe even we go a little bit lower, and we pull back to around 174-ish area, incredible buying opportunity. That's at least my thought. I kind of think so. Maybe earnings comes out strong, maybe whatever the case may be. But if we're wrong, right, we trade down to here and we start buying, this is our risk somewhere in this general, and this is our reward number one. So buy low, sell high on the indices if this really is the case, which I think it is. And we might even just trade down to 176. We might pull back down to here, get another buying opportunity, and we won't really know it. So I'm just going to more ahead just start buying if we do actually get down to that level a little bit longer term. So if you're doing an option and I pull back into this area, the 176 area, I would probably consider August or September. If you're doing stock, that's great. If you're doing put sales, that's also fine. If you're doing bull put spreads, you want to keep it really, really far away, that's also adequate. So I guess we'll just kind of keep an eye on it and see what it does. But getting that little shadow up here, I would not be mortified of a bear call spread, 184 or 185. I don't think there's any profit. I don't think there's any profit in there, but let's go find out if there is. DIA, and I do not want to do this too long term. So May week 1 might be as far as I'm willing to go. 184, 185. You could sell for approximately 20, let's just say 26 cents, and you could buy for approximately 22 cents. So that spread doesn't have any money in it, therefore there probably is a good chance that we're going to be selling off just a little bit. So by the end of today, we mentioned that here's my thought process. Those are some of my percentages about where we would be above as of today. Richard was telling me about some, analysts out there mentioning that we were going to have a sell-off between a certain time period. I think a lot of those analysts will, in just a few weeks will say, oh, I was right if we do something like this. I think they'll be calling out for a triple top, head and shoulders. If we make a lower low, you're going to see a lot of analysts going very, very bearish right there. I'm not saying that this is going to be... that's impossible. I'll just clear that up. I'm not saying it's impossible. However, I'm going to be a buyer down here. Can you guys tell me why? Let's just say in this general range, 176 to 170. Somewhere in that general range. Why would I be a buyer down there? Either for stock or long-term options or pulpit spreads, whatever you want to do. Well, number one, that's what the trend's been doing for the last few years. It's incredible support. Buy low, sell high. The trend has not confirmed bearish. Those are a lot of good reasons. So, here's a DIA viewpoint on the weekly. So looking at it on the weekly chart, just give me a few seconds, let it load. But you got, again, some nice strong candles. Could this form? Could we do this and I buy down here and it causes a little bit of a head and shoulders and whatever, yeah, and that's the case, I'll take a little bit of profit off the table up here. Everything will be fine. And if we actually do form a head and shoulders on the weekly, I'm going to need this, and I'm going to need some pretty interestingly bearish candles, 2016 to begin forming before I call this a head and shoulders pattern. You guys all know I'm ready. I'm ready if it happens. If we do get a market rollover, great. Let's go bearish. But until it happens, I'm going to be bullish. I mean, I personally think if the DIA does this, we trade down, and here's the 100 simple moving average come up on the weekly. I'll buy there again. I'll do it again because I think that's, why not? Buy low. We'll see what happens. All about risk reward, ladies and gentlemen. SPY, here it is. Very similar thought process on SPY. Some lower highs there, some higher lows there. One more wave rotation down and a possible bounce. Yummy yum gumdrops. I like it. QQQs. If you're triggered into the Qs bullish, makes total sense to me. I would consider, let's actually come up here and see what type of premium a 110 or a 19 call could bring in to create a debit spread. Let's go look at the QQQs. May week 1, 109 is 60 cents. And the 110 is 29 cents. So for a debit, that's not that bad. 120, 110. I think I could get behind doing that. I'm going to do a covered call. I'm going to come in here and change the format style. Call sold to leg into debit spread. 4/13/15. May week 1. There we go. So again, if you did buy calls or get into stock or something like this, I mean, we're selling at a resistance. We can expect a little bit of a pullback to happen. And if it does continue up to 110, I'm sure you would be pretty happy about a nice 1 to 2, risk reward ratio. If your protective put trigger is 105.52, we know we're getting a little bit of resistance right there. We know that the 110 is also a very, very strong. So if we do continue to trade up, we could get a little bit of a pullback, and then May week 1's over, it expires, we get some profit, we get some premium, and we can do it again. Bam! Trading plan. I dig it. Here's the IWM. So the IWM, cute little doji, resistance, higher lows, a sell at some point in a breakout, right? Pull back, buy the bounce. I'm digging it. I'm still bullish. Now, again, let's just hop back over to what I mentioned a while ago so that there's accountability here. When that FOMC meeting candle broke bullish, which was this one right there, I mentioned that we're going to have a lot of bearishness, a lot of choppiness, a lot of sideways. It's going to be a little bit rough for a while. Things are going to get weird. I think this is a pretty good definition of weird. It's really not that beautiful. So we'll find out. Questions, concerns, thoughts, opposing views, ladies and gentlemen, on the general market overview potentially. Anything at all? You guys good? Okay. All right, no questions. I was waiting on you guys. Didn't see if you had anything. Today is Merchant Monday, so let's look at some merchant stocks, shall we? And here's our list. So Whole Foods, JCPenney, Target, Walmart, and Macy's are the ones that I have written down. After we go through those, I'll ask you guys what you want to look at for tomorrow, Tech Giant Tuesday. We'll go look at the requests that you guys have for today as well, because you guys did make some requests. And then we'll look at the day trade that we're in, and we'll see what's going on, and we'll go from there. So Whole Foods was just a few pennies away from our stop just the other day. I mean, literally, 50.88. And when I say a few pennies, the low of that candle was 50.91. The low of that candle was 50.93. So I don't think that Whole Foods does that, but if it does, that'll be probably the closest stop that I've had in a very, very long time. Near the 100, good pullback. I mean, it's a strong bullish wave in here. Buy the bounce. anywhere around 50 to 50.28 is a healthy pullback to have, right? So that's really all we're looking for is on the daily. The weekly is not going to show us too terribly much because it's kind of like a doji type of pattern, a little bit shaping up, but getting almost a Morningstar-esque reversal pattern on Whole Foods, right? So if we break above 52.79, yeah, I could see us being a little bit more bullish in that regard. Definitely an accumulation pattern. Absolutely public participation phase. Some type of selling, so we could get something like this where it turns into a distribution phase in this general range or region. But there is no put sale premium or bull put spread premium at all on Whole Foods, 50 or below. Just none. Zilch. Zero. So in that case, I guess we'll just be more bullish than bearish. Either stock ownership or if you're buying calls, Angie Barbosa, when's the earnings for Whole Foods? I don't think it's until May. Sometimes TradingView has that little E and sometimes it doesn't.
No, what's up with that?
I don't know. They've been working on a lot of things.
It's the 6th of May after close.
6th of May. So we got a little bit of time. Okay, there we go. Perfection. So I could see us trading up to here by then. It'd be a stretch. It'd be hard to do it, but we'll see if we do. But there's Whole Foods. A little bit more bullish than bearish. So JCPenney, me and Richard Karasik and a few others are looking at it. We had an intraday trigger at $8.78. So we talked about on 4/7/15, if we triggered this 8.78 to be a little bit more bearish than bullish, either some bear call spreads, call sales, whatever the case may be, that didn't trigger. So the 9.16 resistance on JCPenney, getting some decent volume. If you're day trading this one often or ever, I would probably keep a bullish perspective on it for either a swing trade or a day trade. The swing trade, the risk reward's not that great. If we had a bullish entry around 940, a stop around 870, target about 10, it's not that sensational. We got some resistance here, some resistance here. This was a great false breakout that ended up, really reversing quite nicely. So I guess overall my thoughts are on JCPenney. I'm more bullish than bearish, but just slightly. If we come into the hourly time frame, here's the hourly, waiting for that to pull up. They'll probably show a little bit of bullish edge, but not a lot of it. Dun, 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 just waiting on the chart and software to load. That's really all, just waiting on the loading. I did this the other day too, where it would load only one time frame for like 3 or 4 minutes. It might also be my internet, might also be my computer. Type in 1 if you guys can hear me. Just to make sure I'm still broadcasting. There we go. Okay.
I'm hearing you.
Thanks, Ange. So Cheryl and Angie, they're on board. So let's go back to the hourly. See if we can see it.
That's all you need. Just Cheryl and I. Yeah.
That's it. That is it. I do like this candle on the hourly for a swing trade perspective. So we got a Morningstar reversal right here on the hourly. Here's a little bit of a flag. Here's some type of small pennant. Broke out, retested, nice candle, and again, we're getting some potential sideways-ness. So if you're swing trading or day trading, keep an eye out on JCPenney for break out above 944. And I would be slightly more bullish than bearish on that guy. Target, which I went into yesterday to buy some products for the Real Life Stock Review product edition that I will be doing, finishing hopefully today or tomorrow. Target, 84.71 is a decent target on target. I couldn't resist. Intraday trigger was 80.89. So at this point, I do not have a specific entry for target. You're getting a little bit of a pennant pattern like that. Could we go higher? Absolutely. Could we also roll over to maybe 82, maybe even a little bit lower? Of course, I would buy the bounce on target. I think a pullback, it's a very weird looking trend right here. This is not pretty, It's not very, no, it's not pretty. It's just grinding and grinding and grinding. So if we do pull back at all and bounce off the 100, I think that would be a great buying opportunity. If target does bounce off the 100 SMA, more bullish than bearish. Here we go. Let's see what that one does. Target. So I don't really have any specific trade set up other than a future one. Walmart. So on Walmart, we had a 79 April put sale. That's expiring this week. So the 200 is doing everything in its power, everything it can to hold Walmart up. So the 79 put sale, let me go see on Walmart. You know, if you don't mind owning the shares down there, it really is not a horrible place to buy a Walmart. If you're looking at, you're doing it as an investment, you know, just to sell and then buy back, the 79 put sale right now is 10 cents, 13 cents to buy. So you'd have made most of your premium back already. Well, you'd have made, 50% of the premium you would have made. You already have it. You know, interesting gap on Walmart. I think if Walmart has a good bullish pop tomorrow, all that premium will just more or less get evaporated. But again, in my particular opinion, very, very strong old resistance support for Walmart. You know, you're getting a lot of really weird patterns right here. And this is kind of a very island reversal type of pattern. Here's a pretty bearish gap as well. And we're making some lower highs and lower lows. So if on Walmart we do close below, I would say $80. If we close below there, 80.07, I'd be more bearish than bullish. In fact, I'd probably, consider buying back this put sale potentially. Maybe doing a call sale if you have shares or buying some protected puts. I don't think I would be directionally bearish on Walmart. But if we close below there, it could offer some day trading opportunities or some short-term swing trading opportunities. We'll find out. What's up? So there we go, 80.07. We'll see what that does on Wally World. Let's check out Macy's too. Macy's had a little bit of a breakout of that triangle pattern the other day. That's interesting. So apparently, according to this, Macy's had earnings in February, so we should have a lot of time left before the next earnings on Macy's. So if that's the case, this looks pretty interesting. Where's the line? It would be right about there. 67.63. I'm going to put it right. 67.79. Some really good volume. A really healthy break off the 100. I'm pretty positive this is the all-time high. Let me check. Yep. Wow. Look at that pattern on Macy's. Oh my goodness. Since we're here, let's just talk something really quick about an interesting fib rule. Here's an interesting fib rule. A lot of traders out there might take this range and measure it forward. Who can tell me why that's not the proper way to measure this range on Macy's? I'll give you guys a few seconds to type in. If you can't, I'll just drop a little Newsom nugget for you and fill you in. All right, Prasad's got it. Kenneth Freeman's got it. Steven Steckler, close. Catherine Swick's very close. But Prasad and Kenneth has got it correct. So if you measured this range, which obviously is a very, very strong support, you couldn't measure this range because we made it a lower low. All right, so there's your range. We broke that low. So if you're measuring a primary or really any type of range on Macy's, or not Macy's in general, any stock at all, if you're measuring a wave prior, that's what you do on fibs, right? All the information is prior to find out where it goes. It can't break the main support and or resistance that you're drawing it from. So for example, if you did this wave right here and extended that forward, that would work. because you'll notice we never broke the main wave down here. So just since we're on the topic, let's talk about boom, boom, boom. So we're measuring from right to left, Stephen. Yep, just as you mentioned. So we're going from here and we're measuring back. So we're from right to left. We're measuring this range. And notice where we traded to. Is that interesting at all? Boop. Right there. The 2 extension. So what does that really mean? Well, it simply means that we can't use this low anymore because this is the new primary low on Macy's. So any wave that you do has to start from that wave. We can't use anything past that anymore as a primary wave. So we have to draw all the way back over to here. And then we could use this range to find out whatever it is that we want to find. So unfortunately, we don't actually have a full, really solid retracement of any kind. So the best wave that I could find on Macy's at the moment would probably be some smaller ones. So you would have this wave, which looks really healthy, right? Boom, boom, failed, came up to the 3618, got some congestion. So we know that this range works. So what we would do then is we would start from this range and go from here, measure that, project that forward. Then we go from this range to here, measure that, and project that forward. So as long as the lows don't get taken out, you can continue to use whatever ranges you want to on Macy's. There you go. See you, Arthur Pierce. Have a good one, brother. Thanks for joining us today, man. Appreciate it. So there's some fib talk. On the daily now, what we can do personally on this particular trade, we could come over here and we could measure a very small wave, right? This one, project it forward because this low has not gotten broken from the previous data. So this is probably some type of 1, 2, 3, maybe some kind of 4, maybe a 5 is building. So in my opinion, I think if we can get some type of move above here, 70.06, I will be more bullish than bearish. We have a little bit of a breakout. You know, we got to close. We're getting some inside day candles. So if we go above 70.06, I would be more bullish than bearish. If we come into the hourly chart to maybe find a good location for some stops, this is a pretty healthy gap on the hourly in here. So even my swing traders could absolutely take advantage of this. I think a stop or protective put, right, however you want to mitigate your risk, could go around 68. And if we break this low, something is changing on Macy's. So this would probably be where my stop would be triggered in. And there we got a swing trade set up on Macy's. Macy's potential swing trade set up. Nice gap on the hourly. Potential breakout on the daily, weekly. I almost spelled that right. Potential. Macy's, just Macy's. Real life trading. All right, there we go. Any other merchant stocks? Okay, Steven wants to look at Yum. I can. Absolutely look at some Yum. Wait for that to load. All right, there we go. It's loaded. So just give me a few seconds. I'm going pretty fast right now for TradingView. It's trying to keep up with me. It's doing its best. Yum! What is it doing? Yum Brands. Wow, that's some really interesting candles on the hourly. You're right, Steven. Yum. Okay. This is an interesting location for Yum. It's a very choppy stock, too. I see exactly what you're looking at, brother. I guess my main question is how much... Let me look at this on the weekly, because it really is kind of trading sideways. And can you check on earnings on this one, pretty please?
Uh-oh. Move cat.
What about a cat?
I unmuted and rolled my chair, and the cat was in the way. Oops.
No worries.
21st. Next Tuesday.
Mmm.
After close.
21st. All right, I'm gonna wait. I'm gonna wait on Yum then, Steven. I agree with you. Some really good candles coming in. I guess we're gonna have to see what that does on the gap. 21st after close. So it's really not too far. I mean, if we're looking at the hourly for a potential short-term swing or maybe a day trade, we would look at this. Here's the resistance. Here's the support. We would look for a pullback into old resistance, new support, and some type of bounce. And that would work for a swing trade and a swing trade and a day trade, or a day trade, either one. So if you're only planning on holding that a week or two, yeah, it makes sense. Absolutely. So there it is, Yum Brands. Looks delicious. Interesting to see what's going on. Catherine said, if you buy now, wouldn't you sell in the volatility from earnings? Yep, absolutely. I mean, really, I guess, best case scenario, Catherine, what you would look for is you have this resistance, it pulls back and you buy, somewhere on the pullback here, 80, 81-ish, around there. And again, best case scenario, it goes up a little bit. Even though it's not a huge move, maybe some of the earning volatility would cause the call option to increase nicely for you. And then you would more or less just sell it at a limit, bring that premium in, and then be good to go. I like Yum Brands. Taco Bell, I don't get a lot from Taco Bell, but the chicken burritos, they're cheap. They're good. KFC, Pizza Hut. It's all bad. It's all bad for you, but it tastes so good. All right, guys. There's some of our merchants. Anything else you guys want to look at? Really quick before I pull up the transport or the text. Tomorrow's gonna be a busy day. TXRH, says Kenneth Freeman. TXRH. What is that? Texas Roadhouse. How did I not know these guys were publicly traded? Man, always learning new things. Thank you, Mr. Freeman. Texas Roadhouse is publicly traded. Wow. Oh, man. I have so many ideas for real life stock reviews. I think I'm going to gain so much weight from eating all this food. Roadhouse. Okay. That looks interesting. Doug says, they're loaded sweet tater. Yes, sir. I bet that does sound good. Okay, so here's my thought. And I had no idea this is so blowing my mind. I have a Texas Roadhouse right down the road. Okay, so here we go, pulling it up. Earnings. I'll see if there's. Okay, so it has May. It might have earnings between now and May. 35. All right, so the options are kind of rough. The only thing you could do is a 35, and you could make a lot of premium for a 35 put sale. But that's really all you have. Is your only choice. 30, there's just no money down there. So I guess in my viewpoint, I would want to close above this particular price, 36.40, and my stop would be the 100 simple moving average. What I would really prefer is for it to trade sideways and bounce off the 100 for a little bit longer. Analysis on 4/13/15. Newsom prefers Texas Roadhouse to trade sideways a little longer and have the 100 SMA prop it up as a support. There we go. That would really kind of be my plan on this one. If we did something like this, trade up and alrighty. Dollar General Ray wants to look at Dollar General. Let's look at Dollar General, shall we? Dollar General. So Dollar General had a good trade from back in the day. It's kind of like a quick little breakout. That was a quick little move. I forget. Few of us took that one. I think Ray was one of them. So looking at it now, we broke out of the triangle. We got another really decent, phenomenal retest gap right there on the 12th of March. Good triangle breakout. I think we're at the all-time high. Pretty sure on Dollar General. Let me just check. Almost positive. Wow. Gosh. Look at these stocks, guys. I will say this for the Bears. It's hard to be a bull still with these scenarios. All I say to my perma bears out there is you go broke picking the top. But I can see how you would want to. Right? Look at this. Oh my gosh. It's crazy. It's cray up in here. Wow. Anyway, I'm off my soapbox. That's just such an interesting chart. So bottom line, since it is so high, and we got a doji on the monthly thus far, even though the month hasn't been that old, I don't want to trigger above 76.51. Let this little pin pattern thing break out bullish, and I'd be more bullish than bearish. Otherwise, I would prefer a pullback. News. Oh, I guess I'll put I. I would really like a pullback to around 72 before buying. So 72 is really just based off the gap and near the 100 SMA. So here's 72. So if we do something like this, we pull back and we buy off the 100. Obviously, we respect the 100 a lot. I love this triangle breakout back here, and I would assume that we would retest that breakout at some point. A pullback to the 100 would be a great opportunity. This would be a bigger retest of the triangle breakout. Analysis on 4/13/15. Very nice, boys and girls. Catherine said, kind of wedges too big for a pennant. Yes, exactly. Pennant thing. Wedgish thing. Now, don't get too technical on me, Jeremy. Okay? Let's not create too much certainty here with the terminology. So some type of, wedgish, pennant, mashed potato dance. Exactly. That's what I would go with. So I think I would be cautious taking it bullish. Much prefer a pullback. Okay. I think we're done. What do you guys want to look at for tomorrow? Netflix is going on there because we're going to do a Netflix virtual earnings play. So that could be cool. What else you guys want to do? Obviously Apple, Tesla. Anything else? Fun? Is that ticker? FUN? It actually technically is. I don't think you were talking about that, but you were talking about the Netflix. Alibaba, GoPro. Anything else, ladies and gentlemen? Amazon. This is for tomorrow's third hour Tech Giant Tuesday. Looking at some swings or potential setups. LNG. All right. Okay. I'll put Facebook on the list too. And IBM. There we go. All right. Get some stocks now. Let's go look at a few that you guys requested earlier. GE. GE. So GE, boys and girls, is a swing trade for us to keep our eye on. We got a nice inside day candle at the moment. We're waiting for some type of hourly bounce on the moving averages. That's really what we're going with. So a moment ago, we noticed this kind of morning star reversal pattern on the hourly. So for your swing trades, right, we're still going to be keeping a very close eye on the hourly chart. So I just want a lot of you guys to know, for those who watch the recording, if you are a swing trader, you still want to have a really, really good grasp of the hourly time frames and the setups, because that's what a lot of our trades are going to be based on. So I'm waiting for a pullback. I just don't know exactly how far. We'll probably check GE each day. It's a potential swing long, at resistance, retest gap, wait for the retest. That's really about it. Here's your exponential moving averages. So what exactly are we waiting for? Well, what we're waiting for is some type of reversal pattern off of the hourly EMAs. Watch for a reversal pattern or a reversal candles off the hourly EMAs. Because granted, we are at a location where there's a lot of people could consider or want to sell here. Because think about it. Think about the sentiment, right? Here's your daily chart. And imagine if you're a GE holder, which is a blue chip, never does anything, right? You're at home all day. You're at work all day. You know, it's just a good buy and hold, nothing to it stock. And you come home, this candle's on Friday, you come home from a long week of work, you sit down, you review your portfolio, you're checking out what moved, and you see GE's gapped up like 20-something%. Well, 10. 10% from, what are you going to do? What would you do? If you're like, oh my gosh, I've been holding GE for 5 years, and this is the highest it's been since I didn't sell last time back in December 2013. What would you do? Probably sell. Well, not you specifically, but there's a lot of people who are going to sell that. And that's what they did. They put in their orders. They said, sell at market. I don't care. So, there's a bunch of sell orders going after hours over the weekend. That's what creates the retest that we're dealing with right now. So on a monthly chart, very, very strong resistance at 27.68. Here we are back to the hourly chart again. So we're just going to wait for some type of retest. I think we'll probably get it around 27. Here's the daily. And that's going to be the best way to play it because, either that or wait for a close above that resistance. So we're hoping for something like this, and then we're going to get some resistance. So that'll be interesting to keep an eye on. GE done. CLVS was another good gap from today. Looking at the swing trade. Average volume, 600, 700,000. It's decent. I do like it. I really, really like the location we gapped to. Just perfectly cleared this pivot. Here is a 5-minute candle today. So for my day traders out there, we had an okay opportunity to buy there. And I was looking at this. I don't know if any of you guys got a chance to take this one, but we were looking at this one earlier. Trade down to the 50 exponential, and you got a morning star reversal, buy and sell type of situation. So for our swing trade, here's the hourly. We haven't fully hit a moving average yet, and I think we will tomorrow. I believe we'll probably get an inside day candle tomorrow or some type of resting candle. But this is a really good retest gap. Great retest gap. Cleared pivot perfectly. Watch the hourly EMAs to buy the bounce. Newsom expects an inside day white candle on 4/14/15. This is one to watch. Keep on your watch list. Good volume today. 2.4 million. Good resistance. If we come here to a weekly chart, it's been moving nicely. It's not that gappy of a stock, but there's a little bit of resistance that we're going to run into, right? Just some. If you're looking at the line chart, depending on how people are going to draw this, you got a little bit there. So here's the daily again. So if we go look at just candlestick patterns, just kind of zoom out, see if we can get any resistance. Because again, that gap is pretty decent. And really our target will be about there. So what we're hoping, or what I'm hoping for, is something like this, bounce, and we'll, entry, stop, target. Looking for a 1 to 2, give or take. Something like that. So that 9-2-14, what would also be kind of nice is if we trade up there tomorrow, trade back down, do something like that, and we get a little bit of a channel bounce. That could be also entertaining. But for my day traders and swing traders, one to watch at least. Allstate, one that we're looking at today. Allstate prime and ready. Ready for a breakout. Angie, does this have earnings approaching? It probably does, but it doesn't historically look like it gaps that much due to earnings. 13.15.
I'm trying desperately to remember the jingle for Allstate. It's May 5th.
May 5th, okay.
After close.
Jingle for Allstate. You're in good hands?
This is You're in Good Hands. Yeah, got it.
With Allstate, you're in good hands. Something like that. I thought it was okay. I thought it was an okay one. Good company. Allstate's a good company. Not my favorite, though. They feel a little, I don't know. They feel like a little outdated as far as an insurance company goes. Progressive. I mean, so does Nationwide, too, by the way. I said that when I worked there. I was like, you guys feel very outdated with your commercials, your technology. Geico, Progressive, definitely stepping up. I forget E-Trade. I think E-Trade is owned by Allstate. It might be owned by Progressive, though. No, E-Trade's owned by Allstate. That's right. That's why they did that, I think. I think Allstate made a good buy on each... am I saying E-Trade? Esurance. I think I said E-Trade. Allstate owns a company called Esurance, which is fully online and is very, very up to date. I mean, Esurance, I actually had Esurance for a few months. Yeah. They're very technical. A lot of internet flexibility. Anyway, interesting to know. 73.01. If we close above there, I'm interested to see what happens on earnings. We got the higher lows. We got the relative highs. Very, very good triangle pattern. If we trade sideways, we close above. Beautiful. Let's see what happens. But I'm interested in that one. Two others, EOG and COG. EOG. What I'm really looking for on this one is some type of, really just some type of either bear call spread or shorting opportunity. So it's obviously in a channel. So this is exactly the time we would want to use stochastics. So we come over here to stochastics and let's see what they're doing. They're loading right now. They're rolling over, or at least we're at the top. So on EOG, depending on your preference, if you went short and you had your stop, here, 98.60, that's exactly what this guy did, and this guy did before, and you can try to do it again. You could also consider a bear call spread, but earnings is approaching. Earnings is approaching, so make sure that spread expires before earnings. But at the moment, EOG really in a very, very nice channel. And more bearish than bullish. However you want to play that, I guess your thoughts. Nice channel. Don't know what else to put. And last but not least of the exact swing trades for today, before I go look at some opportunities for tomorrow and some day trading land. And for today, let's go look at the other one, which was COG. And COG is kind of similar. So it's not really at a channel necessarily, but here is your long-term moving averages. And long-term moving averages, we trade right to the 200. We're kind of failing a little bit. As I mentioned, is not in a channel, so I will be looking to do some bear call spreads up in here, potentially. This pattern looks kind of bearish to me as well. So here's a candlestick pattern, kind of an interesting evening star-esque reversal pattern. So if we close below 30.52 and we had to stop at 31.74, target one would be 30.29 something. Risk reward's not that phenomenal for a directional trade. If you have any money for a bear call spread, just make sure it's before earnings, but you got a good resistance around 32. So I'd probably look into a 33, 34 bear call spread before earning expiration. There we go. There's our swing trades. That's what we got. So we are in one trade specifically right now for the day traders out there. We're still managing it. TCK. We got 15 minutes left in the market. Let's look at what it's doing on the 5. It's not doing much. If I get out now, it'll be right at break even or almost nothing loss. Let me look at this on the 15-minute chart. Yeah, it made similar lows with a pretty nice sized candle. We're hitting the 10. I really just don't think there's enough time in the day to stay in. More or less, if you are in and you want to hold for a swing trade, I think that there is some bearish sentiment to this one. However, I will exit. I'll go ahead and exit, yeah. Take my position. Okay, so $7 loss. Depending on, just more or less the bid ask. So I got in at 13.21, got out at 13.22. So the 1 penny. Again, it just doesn't, it has a similar lows. It did roll over again, which was really the time that we would want it to have continued lower. So if you would, if you did do this and you moved your stop down anyway, you probably did just get stopped out. God, that's great. I mean, this could have been a 3-4 hour trade, and to not lose really any money at all on this trade, we'll find another one. The mornings have been really good. So if you guys are day trading, wake up. Get out of bed if you can, because these morning trades have been working. There's been a lot of good ones out there. For me to say wake up, yeah, that means something. All right, so let me see if I can update this on the sheet. And I'm going to go look at some gaps for tomorrow. And so remember, guys, as far as the gaps are concerned, with our trading and everything, if we go look at an earnings gap, depending on how it gaps, can also be a good swing trading opportunity. Just keep that in mind. So let's go look at a few, shall we? I got stopped out of there. No worries. Earnings before the bell. PRWD. PRWD. That's after the bell today. Perfect world. Let's look at this on the daily. Volume's a little light on perfect world. On average, today it has some pretty decent volume. I would expect this to be a bearish play. So if it gaps down tomorrow, really kind of at all, anywhere in this gap, I would play that as a bearish retest. That looks pretty decent. Earnings before the bell tomorrow. We have a few. So let's look at Johnson & Johnson and then Wells Fargo first. Got all kinds of things over here on Johnson & Johnson. So this is absolutely grinding pretty sideways. So this gap is going to have to be perfect for me to play it. A gap down to 95, I'd probably would look to buy that. A gap down. So again, swing traders, this is information for you guys as well, because depending on how these gap on a swing trade, these also can be played, right? These are a little bit longer term of plays. So if it gaps down, a gap down to 95 could be bought. That's really kind of the best gap down that I like. You know, if we gap down to 97, a gap open right around 97, I would look to be bearish. A gap up, we want these pivots to be cleared. I do kind of like a gap up. So a gap up around, let's say above 104. A gap up above 104 would be a bullish gap, in my opinion. There we go. Pat said, so if you would buy 95, would you sell 94 put? Uh-huh. Yeah. So again, if it gapped down to here and started trading up, because it's just such a strong channeling support on Johnson & Johnson, you can see, you know, very, very strong support. I would. You know, if we gap down, you could sell a put. I don't know if I would sell a put necessarily right now, because on Johnson & Johnson, I don't know how much premium is going to be in there. We can check. Because it is Johnson & Johnson. Usually does not gap that much. Doesn't mean that you couldn't get something out of it, though. Let's see, 95 or 94 put. Well, I mean, 95, you get 7 cents right now. 94, you get 4 cents. I don't think it gaps down that far. I would be shocked if it did. But owning shares down there, in my opinion, really wouldn't be that horrific of a thing. So there we go. Johnson & Johnson, Wells Fargo. Hi, Mr. Fargo. Pat says chicken feed. That's funny. Chicken feed premium. Wells Fargo looks a lot like the financials, which right now are looking pretty interesting. I wonder how this trend line meets up. Okay, that's not that bad. Here's what I would want to gap down to. I want to gap down below 53. A gap down below 53 would be more bearish than bullish. A gap up above 55 would be an okay gap. A gap up above 56.41 would really be the best one. There we are. And kind of the same thing, Pat. I don't think it gaps down to here, but 50, if it did gap down to that level, either a put, sale, or a buying opportunity. Let's see, expiring today or this week. Nope, chicken feed, as Pat Coffin would say. There's no premium for a 50, which is interesting. You would think there would be. But there's absolutely no money at all, which is really wild. Okay. Wells Fargo, done. Let's see, earnings before the bell. I think you wrote in another one. Okay, gotcha. So let's go look at FAST and JHT. What is that? Fast Intel Company. All right, good volume. I got exactly where I want it to gap to already. Let me go look at the weekly, monthly chart to make sure it's either an all-time low or yes. Pull up the long-term simple. Go back to the daily. This one might be a one to keep our eyes on, boys and girls. A gap to kind of right about here, and this general range would look pretty delicious. I wonder if I can get a bracket on there. How do you get a bracket? Bracket. I can draw a bracket. There we go. That's pretty, Jeremy. An open in this range would be a nice bearish gap. I still would not be afraid of it if FAST opens below 37. Okay. If it gaps up, let's get a gap above 41.50. A gap up above 41.50 would be decently bullish. There we go. I like that little bracket right there. That's pretty. Let's see here. Okay. FAST, not doing much. Let's come down to JHT. What is JHT? I do not know. JHT? Is that the one, Pat? Which? Oh, JP. Is JP Morgan doing it? JPM has Morgan. JPM has Morgan. All right. JP Morgan has earnings. I'm still good with this one. On earnings, if we gap above 63.50, I'm still good with that. If we gap up above there, a gap down below 58 would be great. A gap down below 58 would be bearish. So Pat says, I just bought an XLF April 24.50 call. Okay. Pat K bought an April 24.50 call for 16 cents. Let's see what that one does. Hoping some banks report good for you. Prasad, yes, I exited just a few moments ago on TCK. Lost $7. Brought April week 4. Got it. Thank you. JBHT. Okay, I couldn't read that. Sorry. JBHT. Good volume. I can see a pretty decent pivot too, right below here. Right below 82.70. A gap below 82.70 would be nice. There's some support congestion in there, but I could see it being a little bit bearish kind of at the outset of the day. Gap up above 90.61. A gap up above 90.61. I'll see what that one does. Fossil was a pretty decent rollover for today. It just never really fully retraced back to where I wanted it to retrace to. So if you got a chance to play this one, I mean that was the one to go. We just didn't really have the risk reward for it when we looked at it. It was kind of right about here. So that risk reward doesn't really justify an entry, but taking it back there, absolutely. That was the trade. That was it. What did TCK end up doing at the end of the day? Yeah, whatever. Just one that just simply didn't really fall out of bed. So again, for a swing trade, here's a swing trade on the hourly. Hourly on TCK does not look massively bullish. So, hey, we didn't lose. Yay. Right? We talked about that weird support might become an issue, but yeah, it's whatever. It's whatevs. We'll find another one tomorrow and the next day. Opportunities everywhere, ladies and gentlemen. Super stoked. Tomorrow's going to be some good gaps. A lot of financials coming out. A lot of things happening. Since Chris Tom is here, I will look at your American Airlines. Nice little inverted hammer. Still getting some support right around there. Getting some decent support. Bear call spread might have helped you out just a little bit as well. And your Disney, a little bit of a higher high, higher low today, which is good. A little bit of some selling pressure, but those exponential moving averages should do their best to hold that little guy up in the air, at least for this week. We'll be keeping an eye on it for you, my man. Boys and girls, a majestic Merchant Monday, if I do say so myself, and I do, because I just did. Why was it so incredible? Because you guys were here. Pat Coffin, Cheryl, Catherine Zwick, Angie Barbosa, Chris Tom, Chris Wenzel, the world. Thanks, ladies and gentlemen. I appreciate each and every one of you. You guys are crushing it. Really happy to trade alongside real life traders every day. I'll see you guys tomorrow. And until then, remember, love life, live life, and trade it. See ya.